to our main reports today. Indonesia still relies on ASEAN investors to spur its economic growth as the flows of investment from outside the Asian region remain relatively low. The government certainly needs to work extra hard to convince investors in Europe and the United States that Indonesia is also a better place to do business in this country.
Coordinating Maritime and Investment Affairs Minister Luhut Binsar Panjaitan attended a business forum in Seoul, South Korea, to promote investment in Indonesia in the middle of March this year. During the business forum held to mark the commemoration of the 50th anniversary of diplomatic relations between Korea and Indonesia, Minister Luhut lured South Korean companies in the burgeoning Indonesian economy. In his remark, Luhut told Korean businessmen that Indonesian government has introduced hefty incentives to investors willing to invest in renewable energy and healthcare, as well as in the electric vehicle manufacturing. According to Luhut, Indonesia's abundant raw materials and Korea's advanced technology can create positive synergy in accelerating its envisioned transition from a commodity-based economy to an industry-based economy. South Korea is among the 10 largest foreign investors in Indonesia. The country ranked 5th in 2020 with total investment of $18 billion. But its position continued to decline in the following years and dropped to 7th rank both in 2021 and 2022. Despite the downward trend in South Korean investment in Indonesia, Asian investors in general continue to dominate the flows of foreign direct investment in Indonesia. Singapore, Hong Kong, China, Japan are consistently ranked among the top 5 largest foreign investors in the country during the last 5 years. According to recent data released by the Indonesian Investment Coordinating Board, or the BKPM, Indonesia received $43 billion in foreign investment in 2022, the highest in the country's history, and an increase of 44% from 2021. When combined with domestic investments, Indonesia saw 1,207 trillion rupiah in investments, an increase of 34% from the previous year. Foreign investment in Indonesia in 2022 was dominated by the metal mining and mining sectors, which saw more than $16 billion in FDI combined. For 2023, the government is expecting 1,400 trillion rupiah, or $92 billion in combined foreign and domestic investment, and 1,650 trillion rupiah, or $108 billion in 2024. Indonesia's basic metal industry sector received the most foreign investment in 2022. Data from the BKPM showed the sector saw $11 billion worth of FDI, or some 24% of the total FDI in the country received in 2022. In 2022, Singapore was Indonesia's foreign investor, followed by China, Hong Kong, Japan, and Malaysia. Singapore is expected to remain the largest investor in 2023, as the neighboring also intended to invest up to $9.2 billion to support green investment and build a logistics port hub in Indonesia. China is also consistently among the top 5 foreign investors in Indonesia during the last 5 years due to the sharp increase in their investment in Indonesia's nickel smelting industry. A number of Chinese-linked companies have built nickel smelters in Indonesia, namely PT Sulawesi Mining Investment, PT Virtue Dragon Industry, PT Hijadi Nickel Alloy, and PT Harita Nickel. Although the flow of foreign investment in Indonesia is still dominated by Asian investors, companies from Europe and the United States are still actively involved in doing business in the archipelago. The investors from the US, the Netherlands, and Switzerland remain among the top biggest foreign investors in the country. The Indonesian government and the private sector have also actively promoted investment opportunities in Europe to diversify the flow of foreign direct investment into the country. However, the results are not so encouraging. Extra efforts might be needed to convince non-Asian investors that Indonesia is a better place to do business.
Foreign direct investment in Indonesia rose more than 50% to 45.6 billion US dollars, the highest FDI in the country's history, on the back of the sharp increase in investment from Singapore, China, Hong Kong, Japan, and Malaysia. It is an honor for us to have Bapak Andry Satrio Nugroho, the head of Center of Industry, Trade and Investment of Economic Think Tank Institute for Development of Economics and Finance, INDEF. He will share with us his vision or his point of views on the latest trend in FDI flows and the dominance of the ASEAN investors in Indonesia. Good afternoon, Pak Andry. Thank you so much for your time.
Good afternoon. Thank you for having me.
Yes, our pleasure. So we would like to know your opinion that Indonesia have received 43 billion US dollars in foreign direct investment, the highest in the country's history. Do you think that this trend will continue in this year and as well as coming years, or considering the growing risk of global recession as well as some other risks like the elections in 2024?
Yeah, let's try to reflect on 2022 situations when we faced a fragile recovery marked by the war in Ukraine following the post-COVID-19 recovery. So this geopolitical turmoil caused shocks in food and energy prices, ultimately leading to high inflation, which weakened people's purchasing power. As a result, global investment growth was less than optimal. In 2023, we are quite optimistic that the global economy will grow. We can see that food and energy prices are starting to decline, thus improving purchasing power. Additionally, we observe China reopening its economy, and it's driving global demand. And the decreasing global unemployment rate is also a good sign that the global economy will bounce back this year, even though the directions of the global economic growth is not as good as before the pandemic. And nevertheless, we still face a series of challenges ahead. We continue to see the ongoing war in Ukraine and intense meetings between major non-NATO countries like China and Russia indicate that the geopolitical situation will remain dynamic this year. I think moderate global economic growth will undoubtedly provide positive sentiment towards performance of global foreign direct investment. And this positive performance includes as an anticipated increase in FDI flow into Indonesia in 2023. However, we must recognize that the FDI trend pattern entering developing countries like Indonesia will shift with geopolitical risks potentially disrupting investment stability. This FDI trend will favor host countries that have close ties or alliance with investor nations, investor countries. So this will lead to fragmentation of FDI flow, particularly in strategic sector. Investor countries will no longer rely solely on China, for instance, as their manufacturing hub post-COVID-19, and will diversify their production hub across various emerging economies. And with these investment patterns where China is no longer the sole manufacturing hub and many emerging countries become investment targets, ASEAN countries will be among the next investment targets. And if Indonesia can capitalize on this opportunity, it will attract massive FDI flow.
Okay, so we anticipate that the upward trend of the FDI flow will continue this year. Regarding government's target, 1,400 trillion rupiah in FDI, how do you think that this target can be achieved? What should the government do, and whether this is achievable in your opinion, Pak Andry?
Yeah, in my opinion, the government's investment target is quite achievable. As the global economy begins to improve, we can expect an increase in FDI flow this year. The government has also initiated downstream policies and natural resource export ban, aiming to draw new investment that support these initiatives. So by downstreaming natural resources, Indonesia becomes an attractive destination for many countries looking to invest in refining or smelting facilities due to more competitive raw material prices in Indonesia compared to international price. So this patterns mirrors the successful investment in the nickel sector, where a nickel ore export moratorium back then was followed by new nickel smelter investment from China. This year, there are plans in place to impose a bauxite export moratorium and pursue aluminum downstreaming. So consequently, it is anticipated that new foreign investment in the form of aluminum smelter construction project will arise in support of this bauxite export ban. That's the example for this year. So, however, we must acknowledge the challenges that still lie ahead. First, the challenge of industry regulations and policies, which have yet to create a conducive environment for investors. Certainly, regulation may hinder industry players from competing fairly, and some of other regulation can obstruct industries from obtaining raw materials due to import bans. So additionally, the incentive provided to industry players are often minimal and misplaced. For instance, energy prices such as natural gas or electricity for manufacturing industries still remain high, and with limited incentive for obtaining energy as their industrial input at lower cost. This situation result in increased production costs that industry must contend with. So second, the political factor cannot be overlooked. As you mentioned before, as 2023 is a time of preparations before the presidential elections, of course, in 2024. It is crucial to ensure that significant political turmoil does not undermine investor confidence in the country. And investor seek certainty and may adopt a wait-and-see approach until the political year has passed if they perceive a considerable political turbulence that threatens investment stability in Indonesia.
So, Pak Andry, would you mind to elaborate about how can Indonesia becoming more better in improving its ease of doing business? We know that our government has conducted structural reform through the omnibus law, but still we have a very tough competition from Vietnam and India as well. What do you think are the causes of high cost economy in Indonesia, and how we can solve this problem?
So, yeah, I believe that several key factors make starting a business in Indonesia costly, right? First and foremost, the regulatory environment presents challenge. Indonesia is grappling with overlapping regulations that can contradict and negate one another. The government, in collaboration with the parliament, as you mentioned, has issued the job creations law, an omnibus law, aimed at providing a starting point for improving the regulatory climate to ensure the certainty. So particularly when it comes to starting new businesses. However, we have yet to see the full impact of this law. it could take like 3 to 5 years before we observe significant changes. So another critical factor is cross-border trade, right? Is Indonesia still encounters difficulties when it comes to international trade and export or import activities. So there are three primary aspects to address in cross-border trade. So first is the domestic transport, where inadequate infrastructure and connectivity between production center and ports present ongoing challenges. So congested roads, like damaged roads, often result in lengthier and costlier transportation and distribution. Second, border compliance. The border compliance requires further improvement. Recent viral news stories have highlighted customs agencies complicating the entry of goods into Indonesia and imposing high fees. So the primary challenges for border regulatory agencies, especially custom administrations, is balancing and enforcing control and facilitating trade. Transformation to digitalize processes that utilize technologies to meet export and import requirement is essential, I think, for achieving fast and affordable border compliance. Lastly, documentary compliance remain an obstacle as the process still manual. It can hinder export and import activities. I would recommend maybe digitizing the procedures such as implementing an electronic system for filling, processing, and exchanging trade information, and also adopting electronic payment methods. I think these solutions will make documentary compliance more cost-effective, time efficient, and transparent, of course. In conclusion, I believe that addressing these factors is really crucial to making it easier and more cost-effective to start and run a business in Indonesia.
So, Pak Andry, last questions. ASEAN countries dominate the origin of the FDI flows to Indonesia. Why is that so? And how do you think Indonesia can attract more FDI flows from countries in Europe as well as from the United States?
Yeah. So before I think with its large population and growing middle and upper classes, Indonesia offers a vast market for product resulting from the foreign investment. At least I think 56 million people in Indonesia have relatively high purchasing power, making it an attractive destination for investors seeking sizable captive market. And recent years, we have observed a shift in investor behavior with preference for establishing production center in their target markets rather than exporting from their home or host countries. For instance, like China has been more focused on investing in countries within its export markets, as it consider more cost-effective and aligned with their long-term strategic visions like Belt and Road Initiative. It is crucial, I think, to not only attract investor interest in large and potential market, but also to encourage the production of export-ready products for other countries. So this presents a challenge as Indonesia trade to GDP ratio is currently lower than the other ASEAN countries. I think, however, if Indonesia can successfully utilize foreign investment to increase its export growth, the benefit will include not only improved product competitiveness, but also increase foreign exchange reserves. And lastly, if we talk about the FDI flows from European countries and United States, I think beside the lack of competitiveness and maturity in Indonesian investment climate, I believe the issues of sustainability is a concern raised when discussing FDI from these countries. One aspect that is often discussed is the quality of investment that Indonesia has yet to provide. For instance, environmental, social governance or ESG is not yet widespreading among Indonesian companies, especially our state-owned enterprise, which are expected to be investor local partners. We can see that some extractive sectors still do not implement sustainable principles such as good mining practice, and this is, I believe, to be a barrier for those countries to invest in Indonesia. However, recent development show that Indonesia is starting to pay more attention in ESG issues. Because of that, the government has introduced various regulations and initiatives to promote these sustainable practices, including incentive for renewable energy projects and stricter enforcement of environmental regulations. So we really hope that that will be a major boost for our foreign investment in Indonesia this year.
Thank you very much, Bapak Andry Satrio Nugroho, for sharing your point of views as well as your insights. Bapak Andry Satrio Nugroho, the head of Center of Industry, Trade and Investment of Economic Think Tank Institute for Development of Economics and Finance, or INDEF. Thank you so much once again for joining our program today.